Okay, today we're going to talk about activity-based costing. Okay, now this is a relatively recent development, relatively recent being 25, 30 years, in which it's been really an improvement in how we allocate overhead costs to our products. So in order to better understand activity-based costing, let's do a quick review of the traditional overhead allocation process. Many companies used to use what's called a single plant-wide overhead allocation. And what they would do is they would pick an activity that they felt best correlates to the consumption of overhead costs being incurred. Those activities would be machine hours if you had an automated plant that had a lot of machines in it. Or if it was very labor intensive, you'd use direct labor hours or direct labor dollars or labor costs. You might even use units produced if you produce a lot of inventory, for example. All right, now in our example, we're going to use direct labor hours, and we have two products, X and Z. And remember, the formula to estimate overhead costs per unit would be take your overhead annual costs, and this is an estimate you make at the beginning of the year, and you divide it by the estimated annual direct labor hours. In this case, we're keeping the numbers nice and clean. 782,000 divided by 1,000, and that gives us a rate of $782 for each labor hour incurred. Now, product X used 700 hours during the year, and product Z used 300 hours. And given that information, we would then say, well, 700 hours times a rate of $782 per hour gives us $547,000, and 300 hours for Z times $782 per hour gives us $234,600. If we produced 7,000 units of X, that would give us an overhead rate per unit for X of $78.20. 547,400 divided by 7,000 units. Each unit we charge $78.20 in overhead. To that, we would add our direct material cost per unit and our direct labor cost per unit, and there's our product cost per unit. Product Z, $234,600 divided by 1,500 units, we're charging $156.40 for each unit of Z. Okay? And so that's traditionally how we allocated overhead costs. With activity-based costing, what we do is we look at all of our overhead costs and we say, what are the various activities that occur in the manufacturing process? And we subdivide that total overhead cost of $782 into what we call activity cost pools. Now, in reality, this is a time-consuming process that has to be carefully done, because if you do a poor job of defining your cost pools, then the allocation will not be as meaningful. So you have to really get a good understanding of your overhead. And some companies might have 3 cost pools, some might have 10, some might have 50. In our example, we're going to keep it relatively simple. And we say that for our company, we believe overhead cost pools can be broken down into engineering-related costs relating to the design and modification of our products, purchasing-related. We have a lot of different raw materials that we purchase. Okay, quality control testing, and general production support, which is facility maintenance, keeping the place clean, keeping the machines running, tuning them up, etc. Now, for each cost pool, we have to say what activity best relates to this cost pool, because we're going to use that cost driver or cost activity to charge each of the products based upon how much each product requires of each cost pool. We're going to give you an example to illustrate this. Okay, so now for engineering costs related to product design, modification, etc., a change order is something that takes place when we say, okay, we want to think about the evolution of a cell phone. They started out with these big clunky things, and every time they got smaller and lighter and more colorful and were able to perform more features, that's a change order. Okay, so a lot of those took place, and those change orders require people to design and think and test, and so they're going to be expensive. A purchase order is ultimately what the purchasing department does on a regular basis. They place purchase orders with vendors who supply us with the various raw materials and parts that we need to make our products. So, and again, You don't have to use these particular cost drivers. These are simply commonly used cost drivers that companies identify as it relates to a particular cost pool. But a company is free to use whatever activity or cost driver they believe best charges these costs, these overhead costs, to the various products. Quality control. I used to work in quality control. We would test raw materials, we would test work in process, and we would test finished goods. So the number of tests we conducted was a good means of allocating quality control rated costs to our products. If one product had to be tested more frequently, then I should charge that product with more of the overhead costs related to quality control than the other product or products that didn't require as much testing. And then general production support relates to production volume, the facility, maintaining the machines, etc. And that's usually driven by how many units you produce of each particular item. Now, and this is really the key part here, is A, identifying your cost pools, and B, identifying a driver or an activity so that we can assign these costs to our products. This is really the key part here, and then it becomes more of a mechanical or formulaic process. Okay? And remember, the cost pools, our 4 cost pools in this example equals our total overhead of 782. We're simply dividing that 782 up into multiple cost pools, whether it's 4, 10, 12, 15, whatever it may be. Now, it's a busy slide here. Let's take a look at this slide. Using as an example the purchasing cost pool. Okay? In order for us to place a purchase order, we have to have the following items. Well, we need employees. Think of a big company like Disney or Boeing or Lockheed or some company that has to buy lots and lots of parts and raw materials to run their business. We need several employees, many employees. Okay, each employee needs some office space, whether it's an office, a cubicle, whatever it may be, but they're consuming space in our office. They need furniture. They need a desk, a chair, shelves, a computer, maybe a phone, a 10-key, who knows what, office supplies, and we got to light the place so we can see and heat it in the winter and put AC in there for the summer. And so even though it may only take 90 seconds to pick up the phone and place a purchase order with a vendor, or even even less time to send it through electronically, before we're in a position to place that purchase order, we have to incur an awful lot of cost. Okay? So we may have part of a building's insurance, depreciation, property tax that is allocated to the purchasing department, because the purchasing department may have 50 full-time employees, and they may take up 8,000 square feet of space or more. So they may get part of property tax, part of depreciation insurance allocated to that department. And it maybe is based on the use of square footage. Okay? All these costs must be incurred to operate a purchasing department. This process that we just did occurs for every cost pool. So whether it's quality control or production support or engineering change orders, we have to say, okay, what are the various costs we have to incur in order to perform this particular activity? And all these activities, again, support the production process and manufacturing our products. Okay, once we've identified the cost pools and the cost drivers, then we have to do what's called a first stage allocation of overhead costs. Now, we're accustomed to thinking about overhead costs as from a functional standpoint. Indirect materials and supplies, indirect labor, utilities, factory machine maintenance, depreciation, property tax, insurance, cleaning, security, all those other overhead related costs. That's a functional classification. So we're going to take all of these costs and then we're going to say, all right, well, all these activities are going to be somehow allocated to the 4 cost pools based upon how much of each of these activities those cost pools use. Okay, so now we've taken those overhead costs, which initially had a functional classification, again, depreciation, utilities, indirect labor, etc., and we've now allocated them to our 4 cost pools. Okay? After we've done that, notice that 782, that's my total overhead cost. I then say, okay, how many change orders took place during the year? How many purchase orders or purchase requisitions did we place during the year? How many quality control tests did we place during the year? and how much production activity was there. How many units did we produce in total? Based on that, we can now come up with a cost per unit of activity. So engineering change orders, again, they're expensive because you have engineers working on this, designing it. It's not something you just do like that. It takes time. If we had 75 change orders and that department or that cost pool incurred $225,000, then each change order is going to cost $3,000. Each purchase order, remember, purchase order, this is just to place the purchase order. This is not the cost of inventory. Okay, that goes into the materials. Okay? To place a purchase order costs us about $350. Quality control testing. In order to test raw materials, work in process, finished goods, I need all sorts of machines and a laboratory and gauging devices and ways to evaluate strength, heat tolerance, whatever it may be. So $2,900 each time I conduct a quality control test. Okay, and that's because we need the facility, we need machines and equipment, we need the people. All those costs we incur simply to be able to conduct a test. And then general production support, again, this is the facility, the machine maintenance, etc. About $30 per unit that we produce we have to charge $30 for general facility and equipment maintenance. Okay, so now the next thing we're going to do, and I have to give you this information, is we see the total cost for each cost pool, the amount of activity that took place during the year, and the cost per unit of activity. The next thing we're going to do is we're going to take the number of drivers, and I'm going to allocate each of those four numbers between the two products. And again, I'll give you this information. So here it is. We know that there were 75 change orders, 200 purchase orders, 80 quality control tests, and we produced a total of 8,500 units. There's the split between the two products, X and Z. X required 29 change orders, Z 46. Purchase orders, 80 for X, 120 for Z. Quality control test, 25 for X, 55 for Z. And we produced 7,000 units of X and 1,500 units of Z, which we saw when we looked at our traditional allocation to determine the cost per unit of overhead. Once we've done this, and then it's easy math here, we multiply, I'm going to go back to the previous slide, $3,000 per unit times the number of change orders for each product. So there are 29 for X, 46 for Z. There it is. $3,000 cost per change order, 29 change orders for X during the year. I'm going to allocate $87,000 of engineering costs to product X. Product Z required 46 change orders, so I'm going to allocate $138,000. And again, if you add those two numbers up, 87 plus 138, I'm going to go back 2 slides. That's the $225. We're allocating $225 between products X and Z based upon their consumption of activity, activity-based costing. Okay, I'm going back to that slide. Okay, there was $70,000, I guess, of purchase orders. And there it is, the split, 28 for X, 42 for Z, based on the number of purchase orders that we placed in the purchasing department. Quality control testing, there's the allocation. Okay, since we had more tests for Z, we're going to allocate more of the quality control department costs to product Z. And then last, we manufactured more of X than we did of Z, so we're going to allocate more of the general production or facility support to product X. Then we add up all the overhead costs, and again, notice product X plus product Z, $397,500 plus $384,500. That's going to equal $782. That number doesn't change, that total overhead. It's simply how we're going to allocate it. So notice, we charge $397,500 to X, $384,500 to Z. When we divide those costs, those total overhead costs, by the number of units produced, using activity-based costing, I'm going to allocate, or I'm going to charge $56.79 of overhead to product X and $256.33 to product Z. Now let's compare this overhead allocation to products to our traditional method. Look at the difference. Under the traditional method, we were charging $78 to X and $156 to Z. Under activity-based costing, which is a more detailed analysis of our overhead costs, we see that X is consuming slightly under $57 of overhead per unit, and Z is consuming $256 of overhead. So what we call, the end result of this process is that you have pricing or product cost distortion, because under the traditional method, we thought X was actually costing us more than it really does, and we thought Z was costing us less than it actually does. The end result is, if we think X cost more, our sales price is going to be higher, and we may be losing market share. We may not be as competitive with our competitors because we think it's costing us more to produce it, when in fact it's not. And for Z, we may not even be profitable, because we thought the cost of Z was $100 less than it is with a more careful analysis, so we might have set the price too low, and we may not be recovering all of our costs. And so a more careful analysis of overhead costs using activity-based costing will show us that under the old method, X was subsidizing some of the overhead costs of Z. Z is really a more expensive unit. So we can reduce our price of X, hopefully gain market share, be more competitive, and Z, we may have to raise the price, or else we're really cutting into our profitability. Under both scenarios, X and Z being overpriced and Z being underpriced using the traditional method, our pricing strategy may not have been optimizing our profit. And this is the benefit of activity-based costing, is when you have a better understanding of your overhead costs and you have a more accurate allocation of overhead costs to your products, you know your cost better, therefore you can set your price, your sales price, at a more appropriate level to either gain market share or to make sure that you're achieving a certain profit margin. Okay? And that is really the main point of activity-based costing, is through a more careful analysis of overhead costs and subdividing the overhead costs into multiple cost pools, and each cost pool we analyzed independent of the other cost pools. We're going to get a more accurate assignment of overhead costs than if we use just a single traditional overhead method. And that's it.